just a level set for the audience here, CAC, or customer acquisition cost, is usually defined as the sum of marketing and sales costs, the amount of money you spend advertising your business on, say, Google and Facebook and TikTok and all of these other marketing platforms, all the cost associated with supporting all of that advertising, uh, plus any cost you have in terms of sales, a sales motion, humans making phone calls, sending emails, talking to prospective customers, all of that kind of thing makes up the numerator of this equation. And then in the denominator is the total number of new customers you've acquired from doing all of that activity, if you will. It is the fully loaded cost of acquiring a single paying customer. It's a fairly important metric if you want to grow a business and you want to grow it sustainably. It's often very, very misunderstood, frequently miscalculated, frequently shown in all kinds of variants. And today I'm going to spend a little bit of time demystifying it and hopefully reducing the level of anxiety even just the mention of a cost of acquisition brings along for lots of marketers and revenue leaders and CEOs and things like that. Just in terms of sort of beginning to figure out how to calculate your cost of acquiring a customer, right? Oftentimes this metric is represented from data that comes out of these advertising platforms, right? Say Meta and Google and things like that, for example. And the main challenge with this is every platform calculates this using the data that they're privy to. Not all of your data, but the data that they're in particular in their silo privy to, if you will, right? And of course, every platform, particularly the advertising platforms like the Googles and the Metas of the world, are incented to make this look good for you, right? Hey, your CAC on Meta is like better than your CAC on Google, or you're better than your CAC on anywhere else, for example. So that way you're incented to spend more dollars with Meta or Google or whoever it is, for example. But what you see here is a thing that happens often, right? Like we deal with this every day as a business at EQ, where we help executives make better decisions on how to optimize their, cost of acquisition. Each of these platforms will claim a certain number as to how many customers they're responsible for. The sum total of all of that comes out to be significantly larger than what the actual number of customers you acquired in any given month is. Math is generally hard, and this makes math even harder. The math doesn't math, as the kids like to say these days. Each of these platforms will optimize for their own attribution windows and favor their own performance. The way these things are measured is different, and the lack of visibility into it makes this like a very confounded, very difficult thing to get your head around. So our best practice in terms of how to calculate this is a more grounded to reality, a more grounded to truth kind of approach. What this means is the numerator of the equation we looked at earlier, which is all the cost data, all the how much money did you spend, should come out of these platforms, right? Should come out of Meta, Google, TikTok, etc. All of that ideally is put into a data warehouse so you can monitor it and filter it and clean it and those kinds of things, for example. The denominator of the equation we looked at earlier, which is the number of new customers, should come from your internal data sources, your CRM, your customer database, your CDP, whatever platform it is that has the source of truth in terms of your number of customers. It should come from there. All of these should be put together in a singular data store. These two data sets to be cleaned and matched such that you can properly calculate your cost of acquisition for your definition of what a customer looks like. And that you're reconciling this regularly to where you're actually truing up the numbers that come out of this with what is in your financial reporting system, as well as what you're actually paying these vendors, the Googles, Metas, etc. of the world in terms of cost of acquisition. This can come across like a complex endeavor, but this has been tried and tested and done, right? If you come work with platforms like EQ or many others, for example. We have standard ways of doing this and relatively easy ways of doing this, but it is absolutely critical to get to the truth of this. If you don't know the truth of this well, if you don't have control over this, you cannot optimize it. What you can't measure, you can't optimize, as they say. Some additional considerations, right? If you remember, we talked earlier about marketing cost and sales cost, right? There's additional cost beyond what comes out of these platforms that you should consider as part of your cost of acquisition. Things like the cost of your sales team, things like the cost of your account teams, things like marketing overhead in terms of agencies or marketing employees that you have on your team. These should be part of that equation and should be proportionally divided back into each of these individual channels or campaigns by leads, by customers, by the overhead divided by spend, different mechanisms to do it. But those factors, those additional costs should be captured as part of your cost of acquisition. That metric is incomplete if you don't do that. And then second, when you count your total new customers, when you're looking for that denominator metric that comes out of your systems, in particular, if you're in a type of business that has long revenue recognition and lead cycles, you're in education, finance, healthcare, things like that, where you get a lead or you get an interested prospect in your system, and they take weeks, months, if not years sometimes, to convert into revenue. It is usually good to consider proxies. It's usually good to consider early behavioral metrics, right? Hey, did this customer create an account with me on the first day, right? Did they respond to my emails or phone calls within the first few days, right? Did they activate a free trial? Did they try out my demo? Did they start using my platform or tool? Using these as proxies, so you get an early read, even if it takes a while for your actuals to bake, such that you're able to, in real time, calculate your cost of acquisition and use that to optimize, use that to change how you do business, is absolutely critical. And of course, do not forget to continue to true that up as real customers flow in, as real revenue flows in. Make sure these proxies are validated against the real data. That's another thing that should be done regularly as well. Again, all of this might sound like extremely complicated math, but it's fairly easily done. Lots of tools today give you fairly easy frameworks and easy mechanisms to do that.